Hey, good afternoon. It's Lifestyle Focus Friday. It's Ronco Johnson keeping you company this afternoon. So sit back, relax, and unwind. Today we're going to be talking about the topic of what is non-direct recognition. You know, we've got a fantastic show lined up for you. So today you're going to learn about what is and why is non-direct recognition so crucial to your accounting, to your finances. And in this video, we're just going to jump into it and give some definition and an explanation so you can recognize why the impact of non-direct recognition is important to you. It's important to our lifestyle focused strategy and how it differs from direct recognition. And what am I talking about? If you don't know, you need to stop by, hang out, come on the inside and see what we're talking about. We're talking about what millionaires and billionaires have been doing for a very, very long time. So whether you're a student, a professional, or simply just looking to improve your financial literacy, well, guess what? I think you found the perfect place. Come hang out with me for about 45 minutes or so and see what you learn and tell me at the end, has it impacted your knowledge? Do you think it's useful? And will you come back? So what is non-direct recognition? You got to stick around to find out. I'm Ronco Johnson, your host, and this is When the Lights Go Out. Are you ready? Thank you for joining us, and I will see you on the inside. Hey, I'm Ronco Johnson, your lifestyle focused wealth coach. Thank you for joining us. This is When the Lights Go Out. Are you ready? And we're talking about our lifestyle focused wealth today. Thank you guys for coming back and joining us. Man, another week has gone by. It has flown by. Can you believe it? Thanksgiving is right up on us, followed by Christmas, followed by New Year's. I'm surely hoping that you got all your goals and your plans met already. And if not, keep pushing. We're going to be talking about something that we don't talk about that much today. And you hear it very, very rarely in the financial world. And the question of the hour is going to be, what is non-direct recognition? We're going to be talking about that today. Why? Because at the end of this program, I think you're going to find that is a conversation that I think if you're buying financial products and services, you might want to start asking for. And you can tell them you heard it from Ronco Johnson right here from the top. You want to tell them that you got the information from the top, and do your research. That's all I'm going to say. Do your research, because we know that there's so many types of products out there and services. But this is a show where we're going to provide you with financial information and information to give you empowerment, so that when you go out there and you're making these decisions that impact your life, you can make a smarter, more informed decision. Okay? That's really what it's all about. So, hey, I'm Ronco Johnson. I'm known as your wealth coach and the host of Lifestyle Focused Wealth. And I want you to join our expert team over at LR Johnson and Associates. If you probably need a little help, or you need a one-on-one exclusive opportunity to evaluate your financial future, or your lifestyle, or your strategy, give us a call. Do a one-on-one. Catch us at roncojohnson.com and schedule your one-on-one, and I'll be happy to talk to you. I want to say what's up to everybody that's joining us. Hey, Sam, what's happening? Happy Friday. I see you, Donna. I see you. Thank you guys for joining us. They're joining us from all over. Good morning, good morning, good afternoon. It's morning some places, it's afternoon in others. Thank you for joining us. Thank you for joining us. As you can see, I'm hyped to talk to you guys. I really am. I'm hyped to talk to you guys this morning. All right, so you're going to have to get your pens and papers out for this one, because we're going to be talking about some stuff that I know a lot of people don't know to ask, won't ask, and a lot of advisors out there don't know to tell about what we're going to be talking about today. So I'm slowing it down just a little bit to give you an opportunity to get your pens and paper ready, okay? So just for context, before I get started, I want to encourage all of you to do a couple things. If this information is important to you and you find it valuable, and you can find value in it, do us a favor. I want to encourage you to put in the comments, or you can see me in a private chat while we're live on air. But put the words takeaways in your comment. That way we know what you're taking away from our program. That way we know that you're learning in real time. And also, I'm going to ask you, don't forget to like, subscribe, and share. I mean, really, bang that button. Share this button. And click the notification bell so you can get all of our content every week, Friday at 1 o'clock. And I would love to have you here. And if you also go to our website, don't forget, you can sign up for our bi-weekly emails, and those things contain all kinds of goodies when it comes to lifestyle. Articles, art, travel, recipes, and much more. So we want you to be part of the family. We want you to be part of the solution. And like I've always said, everything we need is in the room. So thank you guys for joining us again. And hey, you need to be a part of our group. We just need to be a part. It's only $16 a month. You can go visit us at roncojohnson.com, and it will give you an idea of how to get there. And, we got room for you. So we're going to get into it today. We want to talk about what is non-direct recognition. What is it? Why is it important? What are you talking about, Ronco? So we're going to make sure you understand it and learn a little bit today. So get your pens and paper out. I'm ready to talk about it. So what is non-direct recognition? Okay. Well, first of all, it may sound like it's a big deal, but non-direct recognition is a method that's used by mutual insurance companies when it comes to crediting dividends on whole life policies. So non-direct recognition for policyholders, it's important. Why? Because all the policyholders receive the same dividend rate, regardless of whether they've taken out a loan or not. And that's important. That's important. That's important to you. That's important to the way your dollars accumulate. I often call it chasing the dividend, right? So in other words, you can have a loan and still get credit, a dividend credit, for the full amount of money that's passed through the policy. Whereas in a direct recognition is a little bit different. There's two options, non-direct and direct. So direct recognition, that's simply when the insurance companies apply a different dividend rate for borrowed and unborrowed cash values. So you need to hear me. It's a difference. It's a difference in the rates for borrowed and unborrowed cash value. This can affect your dividend rates tremendously. Okay? You got to make sure that you understand that. So if you're looking at it and you're thinking, well, can this affect my dividend rate? Yes, it can. Absolutely can. So if you have an outstanding loan against your policy, you may only be getting credited for a portion of the money that's went through your policy, unlike what you've seen with the non-direct recognition. But today's program, we're going to focus on direct recognition and how it fits into my personal lifestyle-focused wealth philosophy. And we're going to emphasize alignment here. I need you to understand before we dive deep into it why I think it's important for the type of people that we talk to, for you, the client. Let me explain. It fits our philosophy. It aligns with our financial strategies when it comes to us dealing with personal values and goals to create sustainable and fulfilling lifestyles. So you need to know why. The why is it fits our philosophy. Now, I'm saying there's many other advisors in the world. I know I'm not the only one. However, you might want to know what their philosophy and their planning is all about. Because if you can buy into the philosophy, then you will better understand the strategies and the concepts that's being designed for you. Okay? All right? So, I need to say that again before we get started. Non-direct recognition fits our lifestyle-focused wealth philosophy perfectly because it emphasizes the alignment of financial strategies with personal values and goals. Okay? And our whole goal is to have sustainable and fulfilling lifestyles. Simple as that. So if that makes sense to you, go ahead and give us a thumbs up. Go ahead and give us a thumbs up. We got a lot to go into today. And I want to make sure that you got all the information you're ever going to need as it pertains to non-direct recognition, right? That's what our goal is today. That's what our goal is going to be today. I want to say hello to everybody that's checking in. Thank you guys for coming back. Hey, Leela, I see you out there. Good to see you coming in from Canton, Georgia. Thank you for joining us. Thank you for joining us. And listen, if this is your first time, go ahead and say hello. Put something in the comments or send me a private chat. I would love to highlight you on the show. Thank you for stopping by. I know that a lot of you are out there watching, but I want to make sure that you understand that you're invited. I want to bring us in. Come on in. Come on in. I want to hear from you. I want to know you're there, right? The more I can hear from you, the better it gets. Because I know we're impacting people all around the world, and we just want to be a part of it. And it gives me great joy, right? So, as we get into it today, I promise you, here's a couple things that you're going to talk about, or you're going to take away from it. You're going to learn why non-direct recognition is a crucial part in your accounting and your finance. And it won't matter if you're a student or a professional. It won't matter if you're just wanting some financial literacy. This is information that you're going to be able to use forever. Not just one time, forever. Hey, thank you, Sam. I really appreciate the thumbs up, brother. I appreciate it. So here's the hook today. Here's the, and I'm going to go to a commercial and come back because I just don't know if you're really ready for how in-depth we're going to go. So I'm going to give you a moment to get prepared. And then I'm going to challenge you to say, hey, look, I want to know, have you seen any other podcasts out there like this one that's giving you the details that the wealthy know about, that the true professionals and the experts of the financial industry happen to know, that maybe your local guy has no clue about? And, we want you to leave a comment. We want you to let us know. Putting my reputation on the line. But here's the rub. Today, we're going to talk about this concept of non-direct recognition. And I'm going to try to explain it in just 60 seconds. And in fact, I probably have already explained it. It was so simple, you probably missed it. But we're going to dive deep into it when I return and telling you why you need to be part of our lifestyle focused community. Why? Because this is the type of information that we share with people already taking advantage of what our super duper secret financial tool does for the world. And the question is, are you ready? Are you ready for that? I don't know. If you're not ready for it, I don't know what else to say to you. You've been around for a while. And I'm trying to figure out what's taking you so long to figure it out. And I just gave it to you. So it's going to take us 60 seconds or less to talk about it, to explain it, and then I'm going to go into detail and answer some of the things that maybe make you a little bit more curious. So sit back, relax, and unwind. I'll see you in a minute. Hey, join our Lifestyle Focused Wealth community. Membership starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. All right. Thank you for hanging in there. Like I said, we here at Lifestyle Focused Wealth, I want to make sure that we understand something. As we're getting bigger and bigger and we have more of an audience and people are starting to join us more and more, we want to make sure that we highlight our lifestyle focused philosophy. And why that's important, because it is the main center point of everything that sets us apart. It's the super secret sauce to what we do and why over the last 26, 27 years, 28 years, we've been able to make some people some of the most successful just by allowing our holistic approach to do what it needs to do over time without a bunch of stress. So it's important to know that our lifestyle focused wealth philosophy emphasizes aligning financial strategies with personal values and goals to create a sustainable and fulfilling lifestyle. And within that framework, that's why non-direct recognition plays a crucial part. And I'm going to share with you 7 reasons why it's important. And some things you might want to consider. Well, let's just start with it. Consistent growth. Number 1. When we're talking about consistent growth, in a non-direct recognition ensures that a policyholder of a whole life insurance policy through a mutual held company, it ensures that the policyholder receives the same dividend rate regardless of whether or not they've taken out a loan against their money or their cash value. It's this consistency that helps maintain steady growth. Steady growth for the life insurance policy's cash value is important. I think it's the essential part of long-term financial planning and wealth building. So as I'm going through these top 4 reasons, I want you to understand how that aligns with having a healthy lifestyle-focused wealth mindset. And then as you start to see it, you'll start to see the value in the information that we're given. Number 2, Simplified financial planning. Let's keep it simple. How many of you want to keep it simple? If you want to keep it simple, put KISS in the doggone comments or in the chat. Put it in the chat. I would love to see it. Okay? Keep it simple. Simplify financial planning by having this as a uniform dividend rate. The policyholder can easily predict and plan their financial future. This simplification aligns with our philosophy of making financial management more accessible, less stressful. And if that aligns with you, give me a thumbs up. Who wants to be stressed out about their finances? Some people already feel like it's complicated when it doesn't have to be. Our goal is to make it easy. Make it easy on you, right? I appreciate it. I love all the kisses, y'all. I love all the kisses. I love it. Thank you. Thank you guys for responding. So I think at the end of the day, we just make things too difficult at times. All the charts and all the broadcasting and all the stuff, keep it simple. It's consistent. I didn't say it's got to be the most risk-taking, but it needs to be consistent, right? If you're okay with that, this is probably the right place for you. This is probably the right place for you. Number 3 is maximizing your cash flow. So when we're talking about maximizing cash flow, your non-direct recognition policies allow policyholders to maximize their cash flow by ensuring that their entire the policy's cash flow or cash value is working towards their financial goals, rather than being penalized with a lower dividend due to them having an outstanding loan. So I want to be able to take a loan without feeling like I'm going to be penalized for it. I want to be able to have access to functionally use my cash value and still be rewarded for it. Does that make sense? In many cases today, that probably sounds like it's too good to be true, but the Swiss Army knife or our secret financial tool called life insurance has these options. Has your agent or advisor sat down and talked to you about it? Has they been able to explain these 4 things? This is why sitting down with an expert, like our folks over at Ronco Johnson and Associates, it can help. It can help. And number 4, I've said it before. Well, the alignment of your personal values is important, because this approach often involves the financial tools to support personal and family goals, such as education funding, such as retirement planning, legacy building. Are you getting my drift? See, non-direct recognition supports those goals by providing a stable and predictable financial environment. That's why it fits our philosophy. That's why it fits. So in essence, I am telling you that non-direct recognition aligns with what I feel like our lifestyle focused wealth philosophy has been promoting from the very beginning of my career. And by promoting financial stability, predictability, and an alignment with our personal values, that I think now is key. With all the hoopla in politics, I think we do need to start checking our personal values a little bit more. All these are key components to the lifestyle focused wealth strategy. So if this is in alignment with your thinking, or you want to know a little bit more, please feel free to give us a contact. Schedule some time to talk to us one-on-one. I would love the opportunity to have a discussion with you. I would love having it. And if you're in the comments right now, please feel free. whether you're checking us out on YouTube, LinkedIn, all the other social media, give us a little bit of a chat. And if you're catching us on the replay later on, still leave us some information down there. Make a comment or two. I would love to send it back to you. Well, here's a breakdown that I want to share. We're going to talk about a breakdown that I want to share with you. I want to address a couple of things. You know, I wouldn't be Ronco if I didn't talk about those challenges. So here's some challenges with direct recognition and how non-direct recognition can emerge as a strong alternative for you. Okay? And we're going to talk about it. No, I don't want to hide nothing. I want to make sure that we have this opportunity to talk about it. We've been hiding too much for too long. Right? So, a lot of times we don't have the opportunity to talk about what it is that we're dealing with. So there's 4 different challenges that I have to address when I'm talking about direct recognition. And it's very simple. Variable dividend rates, reduced cash value growth, complex loan dynamics, and then the potential for higher cost. So this is with direct recognition. Remember I said direct recognition does not give you credit for all your money. It gives you credit for just the portion that remains in the policy after you've taken loans out. Okay? So here's the challenges to it. So I'm going to discuss them while you get an opportunity to write them down. So that variable dividend rate, at least with direct recognition, policyholders who have taken out loans against their policies often receive a lower dividend rate on borrowed portions of their money. See, this variability in your policy can make a difference in your financial planning because it's more complex and uncertain. See, these are the little details that maybe your agent hasn't told you. Is your company a stock company or is it a mutual company? It starts there. And if it's a mutual company, is it a direct recognition or is it a non-direct recognition? I'm giving you the tools so you can start to ask the questions. And then I think it's important for you to find advisors that do understand, and I call them experts. I want experts. You know, if I was going to have brain surgery, I want somebody that knows what they're doing, right? If you can't tell me what an ear and an eye is, I don't think you need to be working on my brain, right? And if you don't work in this world, I don't think you need to even be commenting on this stuff. This is not about what's favorable. It's about the factual details of the plans and how you can manipulate and use these details of these contracted life insurance plans to fit your lifestyle. Am I making sense to you? Second, we're going to talk about this reduced cash value. Policyholders can have, with outstanding loans, might see a slower growth in their policy's cash value due to lower dividend rates because that's applied to the borrowed portion of your cash value. So this can hinder your long-term wealth accumulation. It limits the policy's overall effectiveness as a financial tool. We don't want to have limits. We want to maximize the limits, right? We really want to maximize the limits. That's what we came for. I don't know about y'all, but that's what I'm looking for. I want to the max. To the max. Number 3, complex loan dynamics. When we're talking direct recognition, it requires a deeper understanding of how loans affect dividends. See, the policyholder must be more strategic about when and how they take out loans of their policy, which can add a layer of complexity when it comes to managing their policy. This is why so many people who do have cash value plans, who don't have an idea of how those loans should work, or haven't shared insight, hadn't had someone to share insight about the timing and the value and how much or how little, or even the payback structure. If you haven't had these discussions deeply with your advisor, you might want to start to look at it a little bit differently, because you may not be getting the returns that you're going to be happy with, which, from my point of view, it's a bad press for the community at large, because a person had a negative thing to say, but they had a limited product or someone with limited knowledge representing them, and they're not using all the components that they could. And that's probably not where we want to get our information from, right? So number 4 will be the potential higher cost. The reduced dividends on borrowed cash values can effectively increase the cost of taking a loan against the policy. See, policyholders may need to know you should be willing to repay the loans more quickly and avoid taking loans altogether to maximize dividends. This could be, which may not always be a feasible or desirable thing. See, the purpose of taking out a loan is to be able to take out a loan without the impact. Not because I want to take and pay more. I want to be able to take it out. I don't have to worry about my payback structure, but I'm paying myself back. I don't have to speed up and pay myself back because I'm scared of being hit with this large interest rate. These are the things that we want to consider, right? So that brings me to my next point. Here are 4 reasons why the non-direct recognition process emerges as a positive alternative. And here's 4 reasons. They have a stable dividend rate, number 1. Number 2, consistent cash value growth. Number 3, simplify loan management. And number 4, enhanced flexibility. And I'm going to go through it and share with you a little bit about each one. And I'm going to leave that up on the screen while I'm talking about it, so you can, again, get your pen and paper out there and write it down. That way, when you have the conversation, you sound so astute. And I love it when our financial education aligns with our students, so they can go out there and use terminology that is equivalent to masters of the business. So let's talk about it. Number 1, I mentioned stability and stable dividend rates. See, in a non-direct recognition setup, it offers the same dividend rate for all policyholders, regardless of if there's an outstanding loan or not. I mean, this stability simplifies the financial planning and allows for a more predictable growth of cash value. It really does. Yes, I'm digging into it because I know there's some of you that's listening to yahoos on television who does not know what they're talking about. They just don't know what they're talking about. They're just picking a side. And as they're picking a side, they have no clue why they're picking a side. And then they're telling you to go do these things. Be careful of the TikTok videos as well. Just because they're telling you. Oh my gosh. Thank you guys so much. As you can see, I get really, really wound up about this. That's because I care. That's because I care. Financial education and financial intelligence is the key. I think it's the key to everything that we do. Like I said, everything we do is in the room. So, number 2, consistent cash value growth. We talked about consistent cash value growth. That's because by maintaining a uniform dividend rate, policy owners can consistently grow their policies. Their cash values are going to grow continuously. And even if they've taken out a loan, this consistency supports a long-term financial goal and their wealth accumulation goal. It's simple, at least for someone like me. I like the fact that when I talk to our clients and our students, the things that I'm talking about, I can go home and rest at night because I know my client's not going to wake up in the morning with some surprise of how this thing is mishandled. It won't be mishandled because it's at its simplest form. It's got consistency. How many of you guys can appreciate consistency in any relationship you're in, business or personal? I raise my hand for that. And if you're one of those people, raise your hand for it. Number 3, simplify loan management. Simplify loan management. What do I mean by that? Well, with non-direct recognition, the policyholders do not have to worry about the impact of a loan on their dividends. I told you, it's simple. This simplification makes it really easy. You don't have to worry about it. It's easy to manage. The policy, it's easier to manage the policy simply because the use of its cash value as a financial resource is not complex. It's not complex strategizing. It's going to grow. It's consistent. It's stable. I'm using the right words for you today. And number 4, enhance flexibility. Here's what I'm saying. If we're going to enhance the flexibility, since all cash value receives the same dividend rate, policyholders have a greater flexibility in using their policy's cash value for loans or for the purposes without fear of a reduced dividend. They can go ahead and borrow against it, do what they need to do, buying houses, reinvesting in communities and so forth, and don't have to fear being reduced in dividends. They're still getting the same dividend. To me, again, our lifestyle-focused wealth strategies in our community, this concept aligns very well with the strategies that prioritize lifestyle and personal goals. So what I'm saying to you in the overall is simply this. Overall, non-direct recognition can be what we call more straightforward and beneficial, and definitely a beneficial option for many policyholders, especially those who value simplicity, consistency, and flexibility when it comes to their financial planning. Am I making sense to you guys? I surely hope so. I hope I'm helping you guys out there. Am I going too fast? If I'm going too fast, let me know. Because we've explained it in 60 seconds or less. But I want to go into more detail. And I want to also talk about some, some principles as we're talking about non-direct recognition. And we're going to discuss the application, the benefit, and the potential downsides in real life scenarios. Okay? Are you guys ready for the 4 breakdown? Here we go. We're going to go ahead and break it down. Here's 4 that we're going to break down. In our breakdown, we're going to talk about principles, number 1. Number 2, the application. 3, the benefits. And 4, the potential downsides. Okay? I'll leave that up on your screen because we're going to talk about these key moments here in just a moment. So, when we're talking non-direct recognition, this is a concept that's often used in the context of life insurance and the workplace programs. So for those that are thinking workplace programs, here's a breakdown of those principles and applications, the benefits and the downside or potential downsides. So let's talk about principles first. Okay? Principles. Principally, non-direct recognition involves acknowledging and rewarding individuals without directly linking the reward to a specific outcome or performance metric. Instead, it focuses on fostering a positive environment and intrinsic motivation. So everybody's got a positive outlook. That's what this is all about. Some people may not understand. When you're designing a plan and you're designing a program for someone, especially for our clients, I'm already saying to you, just by our simple design and the engineering that goes behind it, hey, that you deserve to be rewarded for the work that you're putting in. You deserve to be rewarded for paying yourself back. You deserve it. Not because you're wealthier, not because I like you more. I want to make sure that we have a positive environment where everybody's winning at all times. So here's the applications. I promise you the applications. So in a workplace, the application looks like this. Workplace recognition or non-direct recognition can be applied through a series of different ways. One of them is verbal praise, public acknowledgement, or a non-financial reward like flexible work hours or professional development courses or opportunities. But in the life insurance world, in the context of life insurance policies and these such things, non-direct recognition means that the cash value of the policy grows at the same rate, regardless of whether a loan is taken against it. So you could take a loan. It's still going to grow at the same rate. If I have $100,000 and I take a loan for $50,000, the $100,000 is still going to grow at the same rate, regardless if I took a loan out or not. Take a moment, chew on that. Really chew on that. Does that happen when you take money out of a bank account? For all you termites out there, buying term and invest the difference and taking money out and selling your stock. You tell me, are you still earning any money on that? You keep listening to that guy that's been bankrupt, I'm telling you. What do they say? When you sit in the room with people like that, you probably end up just like that. It's time to change your room. Ladies and gentlemen, it's time to change your philosophy. But I did promise you the benefits. So let's talk about the benefits right quick. Somebody said I'm going hard in the paint today. I'm going hard in the paint. I don't see why you call it hard. I don't think it's hard. Here's the reason why I don't think it's hard. It's real. I think it's time that we stop sugarcoating it and making finance fun. Making being intelligent about your money fun. Making being less stressful, less stressed out, with less debt, more fun. I think we should start showing off the fact that we're not stressed about anything. I think I'd rather walk around with a trust account than a big necklace stating I'm rich. That's not real wealth. That's an item. Here's some real benefits to non-direct recognition, right? Enhanced motivation. This is one of the benefits. Enhanced motivation is enhancing motivation by recognizing efforts and contributions, especially when you're dealing with employees. It makes employees feel valued and more valuable and more motivated to continue performing well. See, this is what this community is all about. We're talking about what the community is all about, right? Number 2, improve morale. That's a benefit. When we talk about public recognition and non-financial rewards and how it can boost your overall morale and create a positive work culture, who doesn't want that? So to you new advisors out there who think you don't have an opportunity, you have an amazing opportunity when you're talking to a business owner, because your type of planning, if you're coming to our lifestyle focus camps and our lifestyle focus wealth coaching and using our philosophy, you're going to impact their work environment by making a positive work culture, by giving rewards that boost the overall morale of that employer's work environment for their employees. Number 3 benefit is it's got consistent growth. Once again, see, in life insurance, non-direct recognition ensures consistent cash value. It's growing. It's providing a financial stability for those workers, for those people who are taking part in it. Yeah, they don't say this in a 15-second TikTok video, do they? Number 4 benefit is a financial flexibility. It allows for people to take a loan without affecting the dividend rate. You want to be able to take a loan and still get a dividend for the full amount of money that you got. It's simple as that. You know, when you have money in a checking account, you take it out, you're not getting anything for it. When you have stocks and you sell the stocks, you're not getting anything for that either. Okay? Does it make sense to have the flexibility to still keep getting dividends without being affected? Yeah, I know you've heard me talk about infinite banking and all these different things, but that's not this conversation. This is the inner workings of a policy design. And when you understand the inner workings of the policy design, if you absolutely knew that you were jumping on a trampoline that was only 2 feet off the floor, off the ground, and it was designed to catch you, you're not going to hit the ground. You probably could do jumps that you probably wouldn't try otherwise because it was consistent. I like consistency. I like things that have fail-safes. I like that in my strategy. I like that in our lifestyle-focused wealth community. Consistency. We're here every Friday, 1 o'clock, and I'm telling you, the people who will do and participate at a consistent basis, they start to see the mistakes start to fall away. And they start to see consistent growth mentally, physically, and emotionally. Now, I may be biased, but here's some of the potential downsides. And I know we're in the trees a little bit today. Here are the potential downsides. Number one, there's a perception of inequity. There are some employees that may be working in an environment that might feel that a non-direct recognition is less fair compared to direct recognition based off of performance-based rewards. In other words, they want to be first. It's all about them. They're the only ones that need to get rewarded. Never mind everybody else. See, the non-direct recognition, everybody gets rewarded, regardless of how you decide to use it. That could be a perception of a downside. Number two, overemphasis on the intrinsic motivation. See, relying too heavily on non-financial rewards might not be sufficient to those employees, especially those who are motivated by a tangible incentive. If you're motivated by money or cash, this might not work for you. You might not. And the implementation could be a challenge for you. Number three. So by ensuring consistent and fair recognition, this can be challenging. In many ways, it may require significant efforts from your management team to keep it in place, because some people just don't have that consistency on their own. Am I making sense to you today? How are you guys liking this content? If you're getting value from our content today, please put it in the comments. Tell a friend. Don't forget, share it. Share our information. We put a lot of detail, a lot of work into it. So we're hoping that this information that we're giving you, it really is hitting home and resonating with you. Why? Because we do want you to win. We want you to win at all costs. So, as we're wrapping things up today, I want to talk about some key moment highlights. Okay, here are some highlights that I want to make sure we have. And one notable case study that highlights the impact of non-direct recognition comes from research conducted by the Harvard Business Review. And in this study, they focused on the power of symbolic awards, such as thank you notes and public recognition and certificates, and boosting the morale of employees and their motivation. And in this study, find this interesting, workers who received short, hand-signed thank you notes reported feeling more significant and valued by their organizations. I mean, this simple intervention led to a notable increase in the employees' motivation and overall job satisfaction. This research emphasized that these symbolic awards, while it's not a substitute for any fair monetary compensation, but it can go a long way. It can go a very long way in demonstrating appreciation and keeping spirits high, and especially during challenging times like the COVID pandemic. There's studies, folks. This case study shows that the effectiveness of non-direct recognition in creating a positive work environment and enhancing employees' engagement without incurring significant costs was important to the employer. Well, in the insurance business, it's important to the client to have use of their money, to be able to take loans without having to worry about a significant loss or a significant cost to them. So in summary, what are we really talking about? In summary today, we're talking about the main points. We're talking about the main points that, most people don't get the chance to talk to us about. Right? Here's some of the main points of non-direct recognition when it comes to insurance. And I need you to follow me really quickly. Okay? I want to make sure, again, you guys are family. So I'm taking you inside the brain of how the leaders of this industry really design and how we really think. When it comes to non-direct recognition in insurance, it provides a uniform dividend rate for all of the policyholders, regardless of the loan. It ensures consistent cash value growth, adding to its stability and predictability when it comes to financial planning. It aligns with our lifestyle-focused wealth philosophy by promoting financial stability and predictability. That's why we use it. That's why L.R. Johnson and Associates uses it. That's why we talk about it so much, so favorably here at Lifestyle Focused Wealth, and it's built into the culture of even my foundation, the Ronco Johnson Foundation for Financial Literacy. The challenges with direct recognition, it involves variable dividend rates. It complicates the financial planning process. It results in potentially slower cash value and a higher cost to you, the policyholder, when you take out your loans. That's why, number 3, the benefit of non-direct recognition is so powerful. It simplifies the loan management. It simplifies the financial planning piece of the puzzle. It offers a financial stability and consistency in cash value growth. It enhances and motivates the morale of a workplace. Whether it's through a simple symbolic award or just simply knowing that you're not going to be punished for the usage. The case study impact. Remember I talked about the Harvard Business Review research on symbolic awards and demonstrating the significant improvement of employees who are motivated and showed an increased interest in job satisfaction. It's highlighting the power of non-direct recognition. So here's what I'm saying to you in the end of the day. Understanding direct and non-direct recognition and understanding it in our everyday life and our everyday wealth philosophy, you need to understand that non-direct recognition is crucial for creating supportive and motivating environments, whether in personal finance or in a professional setting. It offers a simplified approach to managing financial products, like whole life insurance, and it promotes a sense of appreciation and motivation in the workplace. This aligns perfectly with our lifestyle-focused wealth philosophy. It emphasizes stability, predictability, and personal values. And by grasping these principles and these benefits of non-direct recognition, individuals in our community can make more informed decisions easier, enhancing their financial and their personal well-being. That's why I say everything we need is right here in the room. Hey, listen, if this has been good for you today, please, if this context has been good to you, it's been valuable to you, and this content, it is important that you do something about it. Save it, share it, send it to your other social media platforms. Let your friends hear it on your other platforms. Let them know what you're taking in. This stuff is important. It's important. And as long as we start to take care of one another and we start looking out for one another, if you saw a person hungry and you have more than you can eat, it's time to pull over and share. And sometimes a hungry person doesn't realize they're starving. Hey, that's my time. I'm Ronco Johnson. This is When the Lights Go Out. Are you ready? Thank you guys for joining us. I absolutely look forward to seeing you at the top. Remember, you can catch me here Friday, 1 o'clock, every Friday. So don't forget to tell a friend. And I look forward to seeing you guys in the coming week. And tell me how this stuff is working out for you. Because everything you need is in the room. I'll see you next time on Lifestyle Focused Wealth. Have a good day.
Ronco Johnson is a fascinating. Ronco Johnson